Hello there. You know that feeling, right? When you open a letter from HMRC and your heart just plummets. The tax bill is way higher than you thought it would be. It's a horrible moment. But look, you're definitely not alone. This whole session has been put together by the expert tax advisors over at ProTax Accountant, and we're here to give you a really clear, simple path to understanding and, more importantly, fixing those errors. So let's get right into it.
Okay, let's start with a number that should make you sit up. 3.5 billion pounds. That's the estimated value of tax errors just from incorrect tax codes alone. It's a massive, staggering figure. And what it tells us is just how incredibly common these mistakes are. It's exactly why you've got to check every single piece of paper HMRC sends you.
Yeah, we've all been there. That dreaded brown envelope lands on the doormat. You open it up and the numbers just don't make sense. That first reaction is always a bit of panic, isn't it? But honestly, please don't. Getting an unexpected bill doesn't automatically mean you've done something wrong. Far from it. In fact, there are really clear, established steps you can take to get this all sorted out.
So here's what we're going to cover today. First, we'll figure out what that unexpected letter from HMRC actually is. Then we'll get into why these tax bills go wrong in the first place. We'll talk about the critical first 60 days. That's a really important window. After that, how to formally challenge HMRC, and even how you might get a bill written off completely. And finally, we'll wrap up with how to stay ahead of the game.
Okay, let's get into it. Section 1, that unexpected HMRC letter. So what have you actually received? Because figuring that out is the absolute first step. HMRC uses a few different forms, and honestly, they're not always the clearest.
Right, now this is a really important difference to get your head around. You've probably got one of two things, a P800 or something called a simple assessment. So a P800 is basically a calculation. You get one if you're on PAYE, employed or getting a pension, and it shows you paid too much or too little tax. But a simple assessment, that's different. That is a formal bill. It's a demand for payment. You get one if HMRC can't just collect the tax from your wages, maybe because you owe over $3,000 or you have tax to pay on your state pension. So the key takeaway here, one's a, hey, here are the numbers. The other is a, you need to pay this.
Okay, before you even think about picking up the phone, stop. Go and gather all your own paperwork. I'm talking your P60, your pension statements, bank statements, any letters from the DWP. Get it all together. Then, sit down and compare what's on the HMRC letter with your own documents, line by line. Does the income match up? Are the benefits right? You'd be amazed how often you can spot the mistake right there in that first simple check.
So, why do these tax bills go wrong so often? It's really easy to just assume you've messed up somewhere, but you know what? A lot of the time, it's not your fault. The problem is actually inside HMRC's own systems. And once you get that, you can move from feeling panicked to taking calm, informed action. Here are some of the usual suspects. A big one is HMRC using estimated figures that are just plain out of date. Or the information your employer sends in, it just doesn't feed through to your record correctly. Sometimes you even get two different computer systems at HMRC sending out duplicate bills for the same tax. And a real classic is when you start a new job or a new pension, and for whatever reason, the system just doesn't link it up to your existing tax record. See? These are system issues, not you doing something wrong. And this really gets to the heart of the problem with estimates. Did you know this? For things like the interest on your savings or any dividends you get, HMRC often just uses an estimate if they don't have the final actual figures. And that estimate, it might be based on information from last year or the year before. If your situation has changed, well, that's how you end up with a bill that's completely wrong. Right, so you've worked out what the letter is, you think you know what's gone wrong. Now we get to the solution. But you have to listen carefully here because you need to be quick. When it comes to that simple assessment, the clock is well and truly ticking. You have 60 days, that's it. From the date printed on that letter, you have a strict 60-day window to query it with HMRC. If you miss that deadline, it becomes so much harder to challenge the bill. So get your calendar out right now and circle that date. It's the most important one. So what's the action plan? First, get in touch with HMRC. You can call them or write to them, but don't just say, this is wrong. You need to be specific. Tell them exactly which numbers you think are incorrect. And then give them the correct figures and tell them where you got them from, according to my P60. And this is non-negotiable. Keep a record of everything, every call, every letter. Write down who you spoke to, the date, and what you talked about. Now listen up, because this catches so many people out. Let's say you query the bill within your 60 days, and HMRC writes back and says, nope,
we think we're right. They'll send you a formal decision letter. This piece of paper is critical because it starts a brand new, even shorter countdown. You now have just 30 days from the date of that letter to start a formal appeal.
And that brings us neatly onto the next bit, how to formally challenge HMRC. If your first query gets knocked back, you move into the official appeals process. Now, I know that sounds a bit scary, but it's just a structured process with a few steps. It means you get more than one chance to make your case.
The best way to think of it is like a ladder. Step 1, you submit your formal appeal inside that 30-day window. That kicks off an internal review at HMRC, usually with a different person looking at your case. If you're still not happy, you can climb to the next rung. That's the adjudicator's office. They're a free, independent service that looks into complaints. And the final step, if you're still getting nowhere, is to ask your MP to refer your case to the Parliamentary and Health Service Ombudsman. The main thing to remember is that the first no you get isn't the final answer.
Okay, but what happens if you miss a deadline? Well, you can ask HMRC to accept a late appeal, but only if you have a reasonable excuse. And what HMRC considers reasonable is pretty specific. A serious illness, the death of a close family member, a fire or a flood, major life events that are out of your control. What they won't accept is things like, I didn't have the money to pay, or I found the website too hard to use. It's a really high bar to clear, which is why hitting those first deadlines is just so important. Right, stay with me here because this next part is really important. It affects more people than you'd think, and it's one of the most powerful tools a taxpayer has. We're talking about situations where you've underpaid tax, not because of a simple error, but because HMRC itself failed to do its job properly. So let me just ask you this. What if HMRC had all the right information? Let's say your employer sent it all over correctly, but HMRC just sat on it. They failed to use that information for over a year, and because of that, you've underpaid tax without having a clue. Does it seem fair that you should have to foot the bill for their mistake? Well, the answer is no, it's not fair. And that is exactly where something called extra statutory concession A19 comes in. Let's just call it ESC A19. In plain English, it's a special rule that allows HMRC to completely write off tax you owe, but only if that debt happened because they failed to act on information they already had. It's basically a fairness rule. So can you use it? Well, you have to tick all three of these boxes. First, HMRC had the right information from you, your employer, or the DWP. Second, they told you about the tax you owed more than 12 months after the end of the tax year they got that info. And third, it was perfectly reasonable for you to think your tax affairs were completely in order. If you can say yes to all three of those, then you have a really strong case to ask HMRC to write off the entire bill. Okay, we've talked a lot about how to fix a problem once it's happened, but now let's talk about how to stop it from happening in the first place. A few simple, proactive steps can seriously lower the odds of getting another one of those horrible brown envelopes. All right, here's a pro tip for you. Download the free HMRC app on your phone. Seriously, do it. You can use it to check your tax code whenever you want. Remember that massive 3.5 billion figure from the start? A lot of that is down to wrong tax codes. A quick check on the app now and then means you can spot a mistake early, before it spirals into a big problem. And another pro tip, and this one is just fundamental, keep meticulous records. Have a folder, a real one or one on your computer, doesn't matter, and put every P60, pension statement, and DWP letter in it. Trust me, when you're on the phone to HMRC trying to argue that a number is wrong, being able to say, I have the P60 right here, puts you in a much stronger position. So I'll leave you with this question. Is your tax bill correct? Don't just assume it is. If there's one thing to take away from all this, it's that you should never just assume HMRC has got it right. Their systems are complicated, they're automated, and mistakes happen all the time. Being proactive is your absolute best defense. Look, if any of this feels overwhelming or you just want the peace of mind of having an expert look at it, then please get in touch with the team at ProTax Accountant. Their details are right there on the screen. You can call, WhatsApp, or email them. Just a quick disclaimer before we finish. The information we've shared today is for general guidance only and was accurate as of February 2026. Please don't rely on it for your financial decisions as tax rules can change and everyone's situation is different. It's always best to consult a professional advisor before you take any action. Thank you so much for watching. I really hope you found that useful.
For more clear, helpful tax advice like this, please do subscribe to the Pro Tax Accountant channel. It would be great to see you again.